So I thought at this point in time, it would be good to put out a series of videos that cover some of the often misunderstood truths about gold. It's funny how much misinformation is out there, but the truth is there for those who know where to look for it. I'm going to start the series by showing you just how huge the gold market is in terms of the above-ground stock, and especially in terms of how quickly gold changes hands on a day-to-day basis. Let's start with this graphic of the gold supply chain, which is available from the World Gold Council. The supply of gold starts out with exploration, production, and refining. The average yearly production of new gold is 2,893 metric tons. 1,414 metric tons of gold each year comes from recycling. We'll talk more about the supply of gold in future parts. Once the bars are produced, they enter the markets and exchanges for distribution. Most of the action is via the over-the-counter markets in London and in the COMEX futures market. I'll talk a little bit more about them in a minute. What I'd like for you to focus your attention on at the moment is where the gold ends up. 52% of it, or 2,233 tons per year, ends up as jewelry. 27% of it, or 1,177 tons, winds up being made into investment-grade coins and bars. 9% of it is used in technology. 8% of it is absorbed by central bank purchases, and 3% of it is purchased by ETFs and other similar investment vehicles. Hopefully it doesn't bother you that the numbers add up to only 99% and not 100%. It's not my fault. Blame the World Gold Council. I guess we'll just have to get past that. The important thing is that really only 10% of the available supply, which includes recycling, goes into non-jewelry and non-investment. The rest of it is purchased and saved. It is treasured, a real store of value. And this is one of the many keys to understanding gold. The huge above-ground stock, valued at market, is evidence of how much the world values gold just because it's gold. This is the measure of the intrinsic value that people perceive gold to have. Without this desire for gold, the market for new gold to add to the supply would be 1/10 what it is now, and nearly all of the gold mines in the world would be forced to shut down. Let's look at this in a different way and put these numbers into perspective. About 4,300 tons per year of gold pass through the refiners and then onto the exchanges. Of this, 1,414 tons is recycled gold. This does not add to the above-ground gold stock since it comes from the above-ground stock itself. The rest, or 2,893 tons per year, comes from the gold mines. Currently, the above-ground stock, which is close to all of the gold ever mined in history, is 190,000 metric tons. This is all of the jewelry ever made and not recycled, private investment products, official gold held as monetary reserves, and unrecycled technology. If we divide the 190,000 ton above-ground stock number by the new annual mine supply, we come up with the number of 66. This means that what is held by the world population is 66 times the fresh new annual supply. No other substance on Earth comes close to this stock-to-flow ratio, not even silver, which is the second closest. Again, this is evidence that the main purpose of gold is to be hoarded. It is savings for those who value it, plain and simple. A nice feature resulting from this is that the mine supply only adds 1.5% to the above-ground stock each year. So booms and busts in production don't affect the total stock much. Try getting a central bank to agree to only inflate the money supply by 1.5% per year. Good luck with that. But this addition to the stock, which works out to be about $158 billion worth per year at $1,700 per ounce, is gladly absorbed by those who value gold. If it wasn't, then the price would crater. But that brings me to the value of the entire above-ground stock. Using the same $1,700 per ounce market value, the entire world inventory of gold is worth an astonishing $10.4 trillion. This is an amazingly large number. One has to only consider the money supply of the U.S. to appreciate just how big it is. Right now, all of the currency in circulation in the U.S. is $1.9 trillion. Even if we use the broad M2 money supply in the U.S., which is essentially all of the bank money, we come up with a figure of $17 trillion. The value of all of the gold is not much less than all of the bank money in the U.S. How's that for evidence that gold is more than a pet rock? But one might say, that's all well and good, but you can't compare gold against dollars. Gold just sits there, whereas dollars rapidly circulate. It's the amount of money times the velocity of money that powers the economy. Okay, fair enough. Let's now look at the rate of circulation of gold. Now, I did tell you that I'd get back to the exchanges. This figure shows the relative trading volumes of various entities that comprise the global gold market. As I mentioned before, most of the action happens in the over-the-counter market in London, where the average daily trading volume over the past 10 years was $65 billion a day, and in the COMEX futures market, where the average daily trading volume was $37 billion a day. The other markets were pretty small by comparison. All totaled, the daily trading volume averaged 2,692 tons at an average dollar volume of $112 billion. This was at a lower gold price. Adjusting for the current gold price of about $1,700 per ounce, the daily trading volume of gold would be about $147 billion. Let that sink in for a minute. The daily trading volume of gold is $147 billion. This is per day, not per year. This trading represents title to gold changing hands. Why would the title to gold need to change hands? Frankly, because it is being used to transfer value from one set of hands to another. And the gold itself doesn't really need to move. It sits in the vaults. It's the title that moves from one person to another. It's very similar to the way that our banking system worked back when we were gold-based. Now, if we annualize this number, assuming 200 trading days in a year, we come up with a total yearly volume of $30 trillion. Holy gold money, Batman! This is 50% greater than the GDP of the United States and over 1/3 of global GDP. Why all of this activity? These are not merely bets on the gold price. Bets on the gold price can be accommodated in the world of exotic derivatives contracts without the title to gold actually changing hands. No, this is evidence, plain and simple, that gold is playing a very major role in the world economic system, whether financial pundits want to acknowledge it or not. Compared to fresh mine supply, the daily trading volume is 93% of what the mines produce in a year. And that's daily trading volume, not annual. Annually, the mass of gold that is exchanged from one owner to another is 186 times what comes out of the earth. It is also about 13 times the total amount of gold held in investor hands. This means that if we were to calculate the velocity of gold, it would be about 13. By contrast, the velocity of the M2 money supply in the U.S. has averaged about 1.7 over the same period. So here is one of the major truths about gold, presented in a video that lasted only a handful of minutes. The value of the above-ground gold stock is comparable to the entire money supply of a major economic power, yet the rate of circulation of gold is much, much higher. In terms of trading volume, the movement of gold is about 1/3 of global GDP. So not only is gold highly valued and used as a store of wealth, but it is also functioning as a major instrument of settlement. It is money, ladies and gentlemen, and it is being treated as such. Oh, and by the way, as you were watching this video, about $1 billion worth of gold changed hands. So I thought at this point in time,